Hello and welcome. It's Declan here with another video. And today I'm just going to do a follow-up video to the YouTube short. I mentioned that Disney and PayPal were releasing their earnings. So in today's video, I'm just going to discuss Disney and how they performed after their earnings report was released and everything. So if you like this video, please give it the like and please consider subscribing to my YouTube channel. It'd be greatly appreciated. Down 2.8% as of market on Friday as of market close. As I said, it closed at 108.06 and it was down 2.08 on the day. So yeah, it was fairly choppy on that particular day. So I'll just go into the article now. So the Disney beats expectations as streaming subscriber losses aren't as bad as feared. So that's good news for Disney. Los Angeles, smaller subscriber losses and a beat on the top and bottom lines were the highlights of Disney's fiscal first quarter earnings report. Yeah, that's very good. So while the company's linear TV and direct-to-consumer units struggled during the period, its theme parks saw significant growth year over year. Yeah, well, I guess people were just glad to get out after the pandemic and weren't watching as much TV as before. So shares of the company were up 5% after the bell. That was just after the earnings report. It jumped up 5%. So here are the results compared with estimates from Refinitiv and Street Accounts. So earnings per share were 99 cents per share adjusted versus 78% expected. So at 99 cents, that's a good, decent beat on earnings. So revenue was 23.51 billion versus 23.37 billion expected. Yeah, that was better as well, according to Refinitiv. So Disney Plus total subscribers 161.8 million versus 161.1 million expected, also better than expected. So we believe the work we are doing to reshape our company around creativity while reducing expenses will lead to sustained growth and profitability for our streaming business. Better position us to weather future disruption and global economic challenges and deliver value for our shareholders, Iger said in a statement ahead of the company's earnings call. So Disney Entertainment, which includes most of its streaming and media operations. So this is during Iger's call, he announced that the media entertainment giant would cut thousands of jobs and slash 5.5 billion in costs. The company will now be made up of three divisions. So these are the changes that are happening. So Disney Entertainment, which includes most of its streaming and media operations, an ESPN division that includes the TV network and ESPN Plus, a parks experience and products unit. Yeah, so they're the changes the company is doing. So a recent price hike for Disney streaming services likely led to the loss of around 2.4 million Disney Plus subscribers during the quarter. The company had been expected to lose more than 3 million, according to the Street account. The company said Wednesday that it will no longer provide long-term subscriber guidance in an effort to move beyond the emphasis on short-term quarterly metrics, Iger said on the call. Netflix made a similar decision later last year. So just a few more things to highlight. So additionally, Iger said that the company will ask its board to approve the reinstatement of its dividend by the end of the calendar year. Disney suspended its dividend in early 2020 due to the pandemic. So yeah, due to the pandemic, companies they had to make an awful lot of changes. So they suspended their dividend payment for their shareholders. So they're going to reinstate it. That's what that's saying there. So our cost cutting initiatives will make this possible. And while initially it will be a modest dividend, we hope to build upon it over time. Yeah, well, that's fair enough. You know, as the company continues to improve and weather the storms of the last few years, they'll bring back the dividend and increase it as time goes on. So as I said, yeah, they're the main points. It was up 5% just soon after the earnings were released. And as of Friday, it was trading at 108.06. So So if you enjoyed this video in relation to Disney and how they've done on their Q1 earnings 2023, I'd really appreciate if you did hit the like button and subscribe to the YouTube channel. It'd be greatly appreciated. Until next time, thanks for watching and take care.